Welcome to FlyTradr. In this demo, I'll show you how you can build your custom strategy using our no-code strategy builder. Let's first navigate to the strategy builder page. Just go to platform and click on strategy builder. This will take you to our no-code strategy builder. It's a simple form-based strategy builder with just 4 sections. We'll cover each of these sections one by one and build our first strategy. First, let's start with the basic section. As you can see, this section has just one input, which is the important one, which is strategy name. By default, you'll see this as my strategy. So I would recommend changing it to something that your strategy actually is about. For example, today we are going to build EMA crossover strategy. So I will name it as EMA crossover. Second input that you see here is strategy intent. This is nothing but a way for you to remember why the strategy was created. Is it a short-term directional trade strategy, or is it a long to mid-term investment related strategy? This doesn't change how the strategy actually performs. This is just for your reference. You can leave it as default and move on to the next section, which is indicators. As the name suggests, this section is for you to pick the indicators that you're going to use in your strategy. You can have either one, two, or as many indicators as possible. There are some strategies that don't need indicators, so yes, it can be without an indicator as well. So in this particular strategy, we will need two indicators, both EMAs, but we'll keep the length different for each so that they actually work differently. So now, as you can see, in this indicator, by default, it is SMA. So let's change it to EMA because we need EMA for our strategy. And in the drop down, you can see there are a lot more indicators that you can pick from. But for this strategy, we only need EMA. So we have indicator as EMA. Our default name is IND1, which is short for indicator 1, but you can always change the name if you prefer. I would like to keep it as it is because it's much simpler to understand what the sequence of these indicators is. So now let's change the length. Length, I will keep it short, say 9. Okay, so the first indicator is EMA and its length is 9. Finally, we have source. Source basically means how this indicator value is going to be calculated. So is it based on when the candle closes? Is it based on when the candle opens? Is it based on the highest the candle had or the lowest? And there are other options as well. So industry best practice is to use close, and by default it is on close. So I will leave it as close. Now let's add one more indicator. Just click on this add button. By default, again, we have the name EMA is already there. So let's only change the length for this particular indicator. So we have short EMA, which is 9. Let's assign a value to long EMA. Let's keep it 25. So that's a decent gap. So we have two different indicators. Uh, First one 9, second one 25. I think that is decent. Now let's move to the next section. So indicators are there. We have a name to our strategy. So far, it's just a simple skeleton. There's nothing in it, right? It can't really do anything because we just have indicators. Now, for this strategy to be executable, we have to have certain signals and conditions, right? For that, we have signals section. Now, as you can see in the signal section, there are two types of signals. First one is the long side. Long side is when you are trading if the market goes up, right? Other one is the short side. That again means you're trading, you're basically selling and betting on the market to go down. So these are the two sides, and each side can have multiple conditions and multiple actions. For example, in this particular strategy, we'll build only long side strategy, and the strategy will have entry condition and exit condition. So signals for entry and signals for exit. So we already have one signal open. So let's first build this one. Now, as the name suggests, the strategy is an EMA crossover strategy, which means we will need to compare both the indicators. We have EMA 9, EMA 25, and find the crossover for these two indicators. And based on that, we will execute our trades. So now, as you can see, the condition has four inputs, two on the left, two on the right, and one in the middle is the comparator, right? This compares these four in kind of inputs. So on the left, you can see you have indicator price value. Same thing is on the right as well. So this strategy is going to be based on purely indicators. So I'll pick indicator. Now, which indicator do I want? First, to be looked at, I'll want indicator 1, which is EMA 9. So I first want this indicator to be checked and calculated. Then second, again, I'll leave it as indicator, and I will pick indicator 2, which is EMA 25. Now we have both indicators. Now how do we compare these for this particular strategy? I will choose crosses above. So for an EMA crossover, there are a lot of conditions basically that you can see here, but the best fit for our particular strategy is crosses above and crosses below. So I'll stick with crosses above. Now, how to read this indicator? You can simply place if in the beginning. So if indicator 1 crosses above indicator 2, then what happens? The action is long or buy. So you can pick the action, and for our particular entry, we want to long or buy because it's a long entry signal. So this is done, right? We have our entry signal for a long trade. Now, if this is too simple for you, you can add more conditions if you're using other indicators as well or other ways of defining your entry. You can keep adding more and more conditions to each signal. There is no limit on how many indicators, how many conditions you can enter. It totally depends on what your strategy actually does. And now there are two types of connectors between these conditions. First is AND, as the name suggests, this connects both, which means both have to be true for this condition to meet and for a signal to be executed. And if you just switch it to OR, then it will mean either of the conditions has to be met for the signal to be executed. So I will just leave it as single condition entry. I really don't need a complex strategy here. So my entry for long is already sorted. Now, what about exit? So I will add one more signal for long because we are only trading long here. So we have entry. Let's set exit condition for long. So now you'll see it says signal 2. Signal 1 is done. Signal 2, this is going to be for exit. So I'll simply reverse this condition for exit, right? I want the condition to be totally opposite, then I'll exit. Uh, Now let's do the same thing. Select everything that you have done above. Um Indicator 1 on the left and indicator 2 on the right. Now, all we need to do is change the comparator condition, okay, and let's just pick this crosses below. So you can see both the signals are identical. The only difference is the comparator. Here it says when indicator 1 crosses below indicator 2, then the action would be, let's change this action to sell or exit or close position. They are all same, so that doesn't really matter. You can pick any. So let me just pick this one for clearer explanation of this signal. So now we have two signals for long side. First one is for entry, which is when indicator 1 crosses above indicator 2, which is EMA 9 and 25. The action would be to enter trade or buy. And if when now if you are already in a trade and we see a signal where indicator 1 crosses below indicator 2, then the action would be to exit, right? This will only work if we are already on in a trade, but this will work, right, uh, when we are not in trade. So that's the difference. Now, both the conditions are in place, both the signals are in place, so we are good to go. Uh, till this point, everything is being covered. We have a fully functional strategy that has indicators, that has entry and exit conditions. So if you use this strategy as it is, it will work, it will produce results, and it can be fully automated. But I would go to recommend you to go to the next section as well, which is basically risk management. Risk management is one of the most overlooked and ignored sections, and it's actually one of the most important ones. So, for your automated strategies, at least the ones that you don't really look at all the time and you kind of put put them on autopilot and they run on their own, so there have to be some additional guardrails, right? When you're trading manually, you're on the screen, you don't sometimes you don't really need the stop loss or kind of position sizing and all of that, because you can look at and react on your own. But what happens if the strategy is running on its own and it runs on for days or so? You cannot be present all the time. So it's important that there are some additional guardrails in place. For that, I would highly recommend using the risk management. So let's set some basic risk management for this strategy. Now, as you can see, we have position size, stop style, which is stop loss, take profit, then trailing stop loss related additional inputs. So there are just three basic position sizing, sorry, risk management controls here. So let's do all three. First, position sizing, as the name suggests, this way we can limit how much we want to trade per strategy, uh, sorry, per kind of trade. So is it maybe full amount of whatever there is in our wallet, or is it a portion of that, a fixed amount of that, or maybe a certain number of units of the symbol we are trading in? So you can pick anything. So I go with percentage because this is the easiest one and the most straightforward. So we'll go with a percentage of the equity. So if I choose zero point 0.5, which means 50%. So the values will be from 0 to 1. So zero point 0.5 translates to 50%. So if the equity or the balance in my wallet is $100, only 50% of that, which is $50, will be used for the trade. Rest 50 will be left untouched. That way, even if things don't go right, you will not be kind of without any capital. You'll still have something protected, right? Let's yeah. Now let's move to the next part, which is uh, stop style. So there are different type of stop losses that you can choose from. So again, for this demonstration, I'll stick to percentage base because I feel this is uh, the most simplest stop loss, right, and very easy to track yeah, and kind of manage. So I'll stick to this. Now, again, the values have to be between 0 to 1, and I will choose, let's say, 2%, so 0.02. Okay, so the stop loss is at 2. If the price drops from our entry by at least 2%, then the bot will exit the trade. And similarly, we will also set a profit level, although this strategy kind of has an exit condition, but that exit condition totally depends on uh, the reversal of the signals, right? And sometimes strategy can go on uh, sideways and not really meet that condition, and you'll actually be stuck for a long time. So it's better to have some profit levels as well, so that you can lock in your profits if kind of your strategy uh, goes to that point. So for 1 is to 2 risk to reward, which is most commonly used, then our profit level should be 4%, right? Because our stop loss is at 2%, so twice that. Now with this, our risk management is in place. The other two, these are a bit advanced and actually are supporting the stop loss only, right? And I'll cover these in some different demo. You'll find that on our YouTube channel because these are a bit complex and actually very important. So they actually need a dedicated video of their own. So I'll leave those. Finally, what you can do is you can maybe review your indicators on the chart. Everything is plotted here. So we have two signals, two indicators, indicator 1 and 2, EMA 9 and 25, represented by blue and orange colors. And you can basically visualize how the strategy works on paper, right? For example, if you check from the beginning, right here, there was a condition when blue crossed orange. That means there was an uptrend spotted and a condition was met. In that case, you'll have your entry somewhere over here. And then if you keep tracking this around this point, there was a reverse crossover, which means the blue crossed back, right? And that would mean our exit condition was met here, right? Obviously, if in between there was any stop loss or profit levels, if they were hit, then you'll exit before that. But if not, at this point, you will exit from your kind of trade. So that's it. Finally, you can simply preview it. Uh, During preview, what you'll be able to see is the backend code because all you have done so far is uh, clicked here and there, right? And you have just entered some input for indicators and all of that. But there was actual code that was happening in the background. Everything was kind of converted into a code, and you can just check that code over here. If this is something you don't really understand much, then you can read the strategy synopsis on the right. This is the same kind of strategy converted into or translated into simple English, plain English, which you can read and kind of confirm if your instructions were actually correctly translated into the code or the strategy in the backend. You can see these are the indicators, you can see these are the signals and action, you can see this is the risk management you used in the strategy. Once done, simply click on save once you're satisfied. Your strategy will be saved. You'll be given a strategy ID. This is a unique ID assigned to this strategy. This will not be repeated by any strategy or any user. So this remains dedicated to this particular strategy, and this will be available now in the strategies page. Uh, so yeah, once all of this is done, you can start testing your strategy or maybe deploy it in the live market. But I would recommend test it rigorously on different time frames, on different symbols, right? And that way you'll be able to validate if the strategy is actually worth using. And yeah, that's it. Thank you.